So very excited to have this conversation today. As George mentioned, the panel topic today is titled Bitcoin Treasury Pitfalls. Is it always the right move? Very clearly, a lot of the momentum since earlier this spring has somewhat tapered off, but we're seeing a lot of unique strategies and flavors come out of this period, and that's what we're here to talk about today. So we're joined here by three great panelists. Gentlemen, why don't you introduce yourselves? David, let's start with you.
Yeah, hey everyone, I'm David Johansson. I'm a founder and CEO of NordBit. We're a Swedish company based in Stockholm, focused on education for institutional and retail customers on the Bitcoin side. Been working with a number of treasury and public companies in this last year, working with regulation, Bitcoin, and everything in between.
Jurjen, CEO of Treasury, based in Amsterdam, a European treasury company.
I'm Michael Bloch. I am a corporate partner and at A&O Shearman, which is an international law firm headquartered in London and in New York with about 40 offices around the world. I do all kinds of corporate work, including M&A, but I'm also the co-head of the UK equity capital markets practice at A&O Shearman. And as part of that, I've been involved in a number of security token offerings and then through to now looking at Bitcoin treasury companies. In fact, we represented Winklevoss on their investment into Treasury recently.
Amazing. So diverse representation up here, two great treasury companies plus some on the legal side. So I want to jump into the first question here instead of kind of the framing, right? What has changed since this massive momentum that we saw in April and June? So an open question to the whole panel. Seen a lot of treasury companies make some major moves. Some successful, others under pressure. There's definitely been a lot of regulation pitfalls that have plagued, listing and that sort of thing. So what's changed in the market since the spring, and what lessons have we learned moving forward? Let's start with you, Michael.
Yeah, so I think if you look at it in terms of what has changed in the Bitcoin market, clearly the revelation has been that the prices and the valuations can be squeezed as well as go in the opposite direction. And I think that plays out in two ways. The first for me is that it highlights the need for Bitcoin treasury companies to be thinking about innovation. To me, the sort of worst type of capital to be chasing after is the speculative capital. That will disappear as quickly as it comes. You want the long-term players to be invested in you and to be the ones who are buying into the types of products that we heard talked about earlier. I think the other thing that is really important is that it's become quite a crowded marketplace, and scale is going to be an important function or feature of those Bitcoin treasury companies that are successful in the future. And I know there was a slightly negative reference made earlier to M&A as why would that happen? Because you could just end up liquidating the assets and you could do that at market value. But I think one of the things to remember about a Bitcoin treasury company that's got a public listing is it has capital that it can use as consideration for a transaction. And I think we will see a lot of consolidation through M&A, and that will help kind of work out who are going to be the types of players who are going to remain active in the market in the long term.
Yeah, I think if you look at the US specifically, that was a massive blow upwards. Now you see Europe really catching up. So really happy to see also more European treasury companies now being present here in the room. But what you will see now, probably in like the next 6 to 12 months from now, is the consolidation, which you highlighted. And I think it's also a good thing for the industry because that ensures that it keeps the Bitcoin basically for the same purpose, which is eventually to stay within the Bitcoin treasury ecosystem. So that's likely going to happen in the next 6 to 12 months. But also, I think more broadly, I think treasury companies need to look at what are you actually going to do on the asset side of your balance sheet. Like everyone has been hyper focused on raising capital by equity issuance, by debt issuance, but everyone's neglecting basically that you're holding the most valuable asset on your balance sheet and actually doing nothing with it. So that's, I think, the biggest push for like the 6 to 12 month period ahead.
Yeah, I think, I mean, the answer is everything has changed, right? You look at early summer, if you were looking to raise for a Bitcoin treasury company, it was like, oh, you're raising 15? No, raise 50. If you're raising 50, no, raise 100. So everyone, it was all about raise as much as possible, dilute as much as possible, get as much Bitcoin as fast as possible as you can. I'd say that has mainly changed right now. Even if we've seen any raises at all, they've been pretty conservative unless they're from the biggest players. As Jurjen mentioned, you're seeing a lot more demands from investors of what are you going to actually do with the Bitcoin? Are you going to get any yield? Are you going to issue preferreds? What are you going to actually do to show that you deserve a premium on your share? But on the positive side, the change we've seen, at least in Sweden, on the regulatory side is all major exchanges, NASDAQ, Spotlight, Nordic Growth, they've all said essentially having Bitcoin on your balance sheet is fine. And so I think that's been the positive change on the regulation side.
Michael, maybe to follow up with you here. So we have pretty diverse representation here today. People from North America, Europe, the APAC region, large diversification here from Europe overall. But we heard from like Gary at Affinio earlier today talking about jurisdictional arbitrage and the viability of starting a treasury company in different sectors of the world. Between a lot of the European listing hurdles that we're seeing right now, account treatment, disclosure rules, where do you see companies hitting walls? Where are they coming to you with questions?
Yeah, so the biggest issue that we're seeing at the moment in the UK market is the fact that we are not part of Europe, and that has been an ongoing issue for some time. But what I mean by that is you have a regulator who is not, there is separation between the financial regulator and the securities regulator. And so you have a regulator in the UK market who is perhaps a little bit more cautious about some of these Bitcoin treasury companies, particularly for the companies that have got an alternative operational business model. And for them, understanding what the business is about, understanding the risk profile for investors and how you cure that through, admittedly, a move towards disclosure-based regime rather than a permissive regime, but it's still taking time to think, what is this product? Is it really an operating company? How does it justify that label? Or is it more like an investment trust that should be treated as such in a different way, regulated in a different way, potentially being on a different market? And I think that is something that is preventing some of those companies from scaling in the way that they need to do. I think that is a little bit different in Europe. I think the same disclosure concerns will still arise, but those are generally cured by disclosure and by focusing on the right kinds of investors. I don't think there's been a huge change in that over recent years. I think that was also the concern that regulators had at the time, that security token offerings and that sort of thing. But I do think for some regulators, especially outside of Europe, where there's perhaps less knowledge about how these Bitcoin treasury companies work, perhaps a little bit of a concern about how new they are, that is causing some concern.
Jurgen and David, when we're looking forward to like execution, tons of different playbooks that have been going around, different versions of the strategy playbook. We've seen, the pure Bitcoin treasuries. We've seen these hybrid companies that have become more popular with like a core underlying business. And then a lot of one-time buyers, holders like Tesla and those sort of things. Where do most companies stumble when trying to execute, these various different models? What lessons have you guys learned, whether operationally or strategically?
I think, this is what's shifting, right? Like, what do you actually do with the Bitcoin when you have it? How do you acquire the Bitcoin? I think what we've seen mostly, that Michael Saylor pioneered, that Metaplanet, Capital B, other companies did really well, is essentially buying more Bitcoin through dilution, right? And that's worked really well for the top players, for the early players. We've seen it work less well for the late comers, right? So I think this is something that needs to evolve is actually how are you going to buy the Bitcoin? And I don't have the answer for the best way to do that, but that's definitely what we're seeing happening. And as for when you actually have the Bitcoin, do you actually use it? And I think that mindset is starting to shift. We were just talking about options. Can you actually use option to generate yield on your Bitcoin, staking? I think there are a lot of ways to do something with the Bitcoin once you have it, but I think we're still in the early stages of figuring that out.
Yeah, and I think also folks need to or like every treasury company needs to find more risk appetite, which they have themselves internally. So really look at like you want to earn more money or like earn more Bitcoin on your existing Bitcoin, which you're holding. Then you also need to think clearly like how much risk are you willing to take? Because that's really dependent on like which strategies you can actually start executing upon. And that's actually the first step which you need to take, and also which effectively is already part of fundraising. And it's part of the story which you tell to your investors. How aggressive are you going to be with accumulating your Bitcoin, and how are you going to use the Bitcoin which you have accumulated?
Yeah, one word that hasn't been used yet, I don't think today, is resilience, and I think that's an important factor for Bitcoin treasury companies to look at internally. Is how are they looking at themselves from a resilience perspective? And I think all of these things about innovation, how you're using the Bitcoin, how you're selling that to your investor base, are all important characteristics of that. I also think it's important, if you want the long-term investors, the pension funds, to be coming into the product through the public markets, you need to be helping them to understand what resilience looks like.
Yeah, I mean, resilience is a really. They were talking about this earlier on a previous panel, just about how there's been so much focus on just like the MNAV KPI metric, and when you're talking to a lot of capital allocators, they want to see like how capable is the team at actually executing this strategy. I guess when you're talking with a lot of these capital allocators, how do you guys adapt to the Bitcoin volatility that's going on, shareholder sentiment, whether when you're forecasting or reporting some of these quarterly earnings reports, how are you distilling that information to be more of a positive outlook for prospective investors?
Yeah, I think if you look at Bitcoin volatility, it has already been going down a lot. So if you talk to investors or capital allocators already, it's already a very easy thing to explain to them. Bitcoin is already dropping in terms of volatility. You see that there is still quite some price action every now and then, especially if you look back, for example, 2-3 weeks ago. But that's natural. And as long as Bitcoin starts maturing more, then that will likely decrease more over time. And it's also a bit dependent on the view which the investor or the capital allocator has itself. If it's a short-term investor, then they are really looking at the current Bitcoin price by that sense. But for us, at least in this stage, that's not an investor which we're generally like really focusing on. So really focusing on like long-term investors which are in it with us for the long run.
David, anything you'd like to add there?
Yeah, I think, when it comes to capital allocators, what I've seen a lot of teams do is kind of put all their eggs in one basket. Like, okay, we're going to work with these guys because they're going to help us, grow more Bitcoin or buy more Bitcoin the best way, or they're going to be our custody partner. And what I'm a little cautious of here is don't outsource your entire P&L sheet, because at the end of the day, you are the management team for your Bitcoin treasury company, and you need to have a clear strategy and work with all of the best partners to make sure that you're buying the Bitcoin at the best prices, that you're getting the maximum yield on your Bitcoin, that you're issuing shares the best way, and that you're actually in charge of your own balance sheet. So that's a pitfall I've seen.
Yeah, I guess to build on that, access to liquidity is like hyper important, right? And we've seen that liquidity and credit has been, starting to be kind of a key friction point here, especially when you're talking to, looking to raise more capital. I guess what are some of the biggest pitfalls around financing and liquidity management for Bitcoin treasuries? What kind of best practices are you guys starting to look at?
I think something which we see a lot of folks which are still neglecting is also look at the liquidity of their own stock. So if you're really looking at, you want to target institutional investors to be able to buy or sell the stock itself, then you also need to ensure that you have like a liquid order book in order to do so. So that's really a key point for us as well, which we're heavily focused on for the last couple of weeks, to ensure that as soon as we are going live, that we also can show that there is sufficient liquidity for institutional investors to actually execute transactions in the sizes which they need to do.
David, I guess as a follow-up, how should firms be evaluating lenders or hedging partners without overcomplicating, just the stock?
I think first one is look at the fine print in the agreements you've signed. We work with an options expert, and I've really seen some pretty crazy clauses when it comes to how the payouts actually happen and whether they actually need to pay you back your collateral. So I think definitely look at the agreements, compare everything. Reputation, seeing who else they work with. And again, don't put all your eggs in one basket. That's the key one.
And I think also to add, like, we're also great partners to exchange thoughts on like how we can do that. there's no reason why, like, if there are over 100 Bitcoin treasury companies, to keep secrets from like best practices which we see in the market. So it's also fine, especially in like an area like this where we can share those thoughts and insights with one another.
Michael, back over to you. Just talking a little bit about legal and governance safeguards. As more boards and CFOs start to consider, the Bitcoin Treasury playbook and put Bitcoin on the balance sheet, what legal or governance structures are proving essential to mitigate, liability and internal control risk?
Yeah, so I think a really important thing to recognize is that the power of the management team's vision and execution capability is a really critical part of any Bitcoin treasury company's strategy. And it needs to be able to engage with investors on that, but it also needs the protections in place to make sure that that strategy is being implemented sort of consistently. You need people with the right expertise on the boards, and that is potentially not going to be the people who are already on the boards of some of those companies, particularly to the extent they've had some other operating business that they're now pivoting away from. So you need to think about who do you need on that board to be able to provide that challenge and appropriate encouragement to the management teams. I think the other thing to remember is nothing kills a public stock price like something going wrong in the business, and particularly when you're in the crypto world. Exposure to cybersecurity issues, exposure to financial fraud, those kinds of issues are going to be top of mind for certain investors. And so being able to demonstrate that you have the systems and controls, you're using the right counterparties in order to protect yourself against those risks is going to be a really critical part of that governance.
Anything you would like to add there, gentlemen?
Yeah, I think if you look at governance point of view, we really adopted that within Treasury. So we have a supervisory board consisting of 4 members, basically top tier board members from a variety of different industries, from legal background, asset management background, trading backgrounds. So that really ensures also that basically the C-suite within our company gets challenged on whatever they're doing. And we're also fortunate with basically having an advisory board basically within the company. So it's more of like a sounding board for whatever we're doing within the companies to also ensure that there are checks and balances in place and that there's nobody which is effectively going rogue on a given strategy. So really, I would say adopting the best practices of traditional finance markets, but also adopting that here now for Bitcoin treasury companies.
Yeah, and I think there's also a bit of crossover as well to some of the private market strategies of having advisory boards, having people who have an independent view. They've maybe seen what works in other contexts. They can provide not just encouragement on the innovation side, but also some foresight in terms of what could go wrong.
Yeah, to add to that, just accounting standards have been very important. A lot of companies in Sweden have had to switch from the K3 accounting standard to the IFRS standard. I think looking over all of that, making sure controlling is in place and that you follow the right path before you even start buying the Bitcoin will save you a lot of time.
So I know we're coming up on time here, gentlemen. We got about 2 minutes left. So final question here to answer the question of the topic panel. Is it always the right move? If yes, why? If no, why? David, let's start with you.
I mean, buying Bitcoin is always the right move, right? Like, I think based in Europe and Sweden, and we're far behind. Like, the US has a lot more Bitcoin than us. China has a lot more Bitcoin than us. I lived in both countries. I love both countries. But Europe needs to buy more Bitcoin. Private citizens need to do it. Treasuries need to do it. Companies need to do it. Essentially, is it the right move to go public? Not always. I think if you are public, buying Bitcoin is a great way to get additional exposure to an asset that's going to grow over time. But yeah, I think buying Bitcoin is always the right move. That's the answer.
Yeah, I 100% agree. I think also it needs to be more broader, even if you look at it. Like we've seen like earlier today already a great example for Bitcoin in Africa. That's just the first move. You see one popping up now in Brazil. So Europe is lagging, but we see that other continents are also waking up and making that move. So that's very promising.
Yeah, I agree with what's been said. I think, the question is really going to be one of, are you really ready to make that pivot into being a Bitcoin treasury company? We've heard a little bit about the companies that will have a bit of Bitcoin as part of a broader pool of treasury assets, and that's fine. I think that is a good development in terms of getting people more familiar with Bitcoin. But I think, as we've heard, you've got to be thinking about the risks, and you've also got to be thinking about what you need in order to make the operational strategy work, and that requires you to go all in.
Amazing, gentlemen. We're right here at time. A lot of great insights today. If you guys are looking for legal help, please reach out to Michael. And if you want to chat treasury strategies, you can chat here with Jurjen or David. Gentlemen, thank you very much.
Thank you.
Thank you.